our Fintech Innovation Lab program, we're seeing a really marked increase in interest in ESG-related solutions by the financial services sector of New York. It was one of the priorities that they asked us to go look for new technology for the latest Fintech Innovation Lab class. And what that means, particularly when it is related to the financial services sector, is ESG is becoming its own asset class.
Maria Gotsch is the president and CEO of the Partnership Fund for New York City and the co-founder of the Fintech Innovation Lab. The Partnership Fund invests in innovative non-profit and for-profit companies that ensure a promising future for New York City. To make New York City stronger and more inclusive, the Partnership Fund prioritises initiatives that create jobs and also support social entrepreneurship, particularly disadvantaged neighbourhoods. The Fintech Innovation Lab is a New York City-based accelerator program that pairs fintech startups with leading financial institutions. Maria, welcome to TCN TV.
Thank you. Very excited to be here and look forward to our conversation.
Okay, and could you tell us about some partnership fund investments that have had a big social impact?
Sure. So there are, I'll talk about two of them. One of them is Grameen America. So that was an affiliate of Grameen Bank, which you probably are very familiar with. They really invented with Muhammad Yunus the concept of microlending in Bangladesh probably 25, 30 years ago. And that's where that operation started. There was a group that wanted to bring that same lending program to the United States. And so they came to us and they had raised some grant money to pay for the initial staffing, et cetera. But they needed capital to really prove that their type of lending model would work in the United States. And there was a certain amount of skepticism in the philanthropic world because people think of microlending as $20 for either a piece of livestock or a sewing machine in a very poor village. But Jackson Heights, Queens doesn't really come up, initially in people's minds as a place to do microfinance, because that's where Grameen started. So we brought and put some money and lent the money on non-economic terms. So we made a 7-8 year loan at 3% interest, and we're some of really the first private sector money into Grameen America. And they used our money to help prove that the model would work in the United States. Now, once they were able to do that, they were able to go to the traditional financing sources, particularly the large banks, through their Community Reinvestment Act obligations, and raise larger sums from them. But they then went on to invest when we exited the investment. So we got our money back, which is a success with our 3% interest. But they went on to, when we exited, had lent money to 40,000 women, most of whom were low income. And it was several $100 million, close to $400 million had been lent to these women in increments of $1,500 to $6,000. And what we really liked about their model is they were not lending money to just put people into debt. You had to come with an activity that would generate income for both your family and to repay the debt. They also had a financial literacy component to it, where they would help report their credit score to the credit agencies to help these women build credit. So there was a lot of nice pieces there. So not just lending to generate income for those women's families, but also getting them more in the mainstream of, financial inclusion is a big sort of buzzword these days. But Grameen was doing this back, 10, 12 years ago.
So Maria, could you tell us more about the Fintech Innovation Lab and maybe outline how the startups are really being supported and integrating ESG priorities?
Sure. So the Fintech Innovation Lab is a 12-week accelerator program focused on companies that have products for whom the target customer or partner is a large financial institution or an insurance company, because we embed fintech and insurtech in the same track. What's really unique and really is the model that we created when we set this up in 2011 is we were some of the first to bring large corporates around the table and sort of around an accelerator program to really create a bridge between an emerging technology company that has a really interesting idea using technology in a new way, but is trying to sell into a difficult to access market like a big bank who's regulated, global, needs to operate at a very different scale. And so what happens in our program is the selection of the companies is driven by those financial institutions. So if you look at the companies that have gone through it, they really represent the priorities of the financial services sector over the last decade or so. And then what happens during the program is the financial institutions, and they're pretty senior people that we're dealing with, take on the role of then mentoring the companies and helping those tech companies get their product to the point where a large institution could actually deploy it within their environment. Because that's often the disconnect. You've got a great innovation, interesting idea, but they've got regulatory things they've got to worry about. They've got security, information security, and helping those younger companies understand both how to operate in that environment, to develop the relationship with the right people, figure out who is the right place for me to get started. Those are all questions that companies that are in the kind of post-product, pre-getting my market fit worked out, could really, we really help them accelerate that phase so that they can be poised to then, get a purchase order from a large institution. So specifically on your question around ESG, every year we go to our partners at the financial institutions, and we're typically going in at a CIO, CTO level, and we ask them for their priorities. And so we know what to go look for, in terms of companies. And what was very interesting is, these conversations were happening in the second half of 2020. ESG companies were on the list, but they were not on the list for one or two. They were on the list for about 70% of our partners. And that was an interesting shift from previous years, where they had been interested, but it was not a priority as it was. And so I think that really speaks to the fact of a couple things. Obviously, there's a big change politically in the United States, but also as an asset class, this is starting to be one that people are paying serious attention to. And once it becomes an asset class, you need a whole variety of tools to deal with it. You need to be able to measure it. You need to be able to track it. You need to be able to structure it. You need to be able to market it. You need to be able to price it so that you can do trading of these investments. And so, then when we went through the selection process, we got a number of applications from ESG related companies, and 2 of the 10 are specifically focused on ESG, doing different things. Obviously, it's really not competing with each other, but coming at it in kind of 2 very interesting ways.
Certainly. And look, finally, Maria, how is New York City doing at the moment, really as it emerges from the COVID-19 crisis? And what advice do you have for Australian cities that are looking to build an innovation economy?
If you walk around the streets right now, there's a remarkable difference in the energy. People are out, they're at restaurants. The other flip side, though, however, the other part of the city that unfortunately really suffered deeply was the small business sector. And many of them did not have the tools to compete in a digital, more virtual world. And so business that would normally have gone to them because somebody walked by the place on the way home and picked up a couple things, that business went online or through delivery. And so if you walk around New York, there's a lot more vacant retail than there was beforehand. So we, again, because our focus is how could we be using capital to help the city? Last summer, when it was clear that the small business community was really taking the big hit, we partnered with the City of New York and the borough chambers of commerce to set up a new initiative to help small businesses. We got some funding from the Peter G. Peterson Foundation, And that basically went to hire a team of 22 individuals whose full-time job is to work with small businesses. So we lined up a bunch of resources from the private sector and the public sector. And this team of 22 has been out there literally on the street, knocking on doors and trying to connect these small businesses in an efficient way to resources that can help them survive. We've done a number of things and are going to be doing some more things in this whole digital divide issue, because this is a big, at least I don't know how it is in Australia, but in America, most of these neighborhood small businesses have been working in an analog way, right? You know, people walk in, they're local, and really in the 21st century, obviously we're going to go back to some of that analog behavior, but we're hoping to use the crisis to put some resources behind getting digital tools in the hands of these small businesses so they can better compete and not just be analog, but be analog with digital capabilities. So, so happy to share, you know, I'm assuming that, I know Australia had fewer days of total shutdown in the United States. So your small businesses may be in better shape than ours. But we really think that's an important sector to certainly what makes New York unique. And then specifically around advice on how to think about building an innovation economy, because that's that second bucket that I talked about in terms of catalyzing future growth. That's really what that is about. And I guess the kind of key piece of advice is understanding what your assets are. Like what do you have that you can work with? And then figuring out where the gaps are, and then who's the best one to fill in the gaps. Sometimes it's government. Sometimes it is a little bit of money from a catalytic fund like ourselves to de-risk a situation so that the private sector dollars can come in. Sometimes the universities need to play a role. It really depends on, you know, what your where you think the opportunity is. But I guess what I'll say with some confidence is it's not going to be just one player. And so being mindful of the fact that these larger initiatives often require different players coming together, bringing different things to the table to really affect change, and being you know, willing to do that, or finding the person or the organization in the economy that can do that will go a long way to, I think, helping achieve the kind of the innovation goal that you have.
Maria, thank you so much for your time and insights today. It's been a pleasure to have you join us all the way from New York.
Sure, my pleasure. And for any of you that are entrepreneurs with a fintech solution, you're welcome to apply. The application's open in the fall. You will have to come to New York because next year we're going to be virtual, but it's a good way to think about entering the US market if you're an enterprise fintech company.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them, or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.